Good afternoon. Good evening, rather. So let me know in the comment section if you can, if I'm audible enough, and if you can see my screen before I proceed. Let me know if I'm live. See. All right. Good evening, everyone. Let me know if I'm audible enough. Let me know in the comment section if you can hear me, and if you can see my screen. And I hope it's not lagging too. I think that's important also. Let me know in the comment section if you can hear me before I proceed. Can you guys hear me? Let me know in the comment section. I'm not getting any feedback from anybody. Just drop a comment if you can hear me, so I'll be sure. Can you guys hear me? I'm not getting any feedbacks. Let me know in the comment section if you can hear me. I don't know if you guys can hear me. There's a comment section there. All right, so I'm not saying um all right, thank you, FL Gamers. So let me just proceed. I was trying to wait for others to join in. Well, I think I've waited enough. Right, so let's proceed. So what we are going to talk about today is breakout trading. How to trade breakouts properly. Right. Okay. Jotted a few points down. Trying to look for right. Just give me a moment. So we all know if you are in the training group I'm holding, you by now know you by now know many of the topics we've talked about so far. We've talked about candlesticks, areas of value, that is support and resistance. Talked about moving average, talked about market order, limit order, and the rest. We've talked about market structure too, where you have uptrend, downtrend, range, choppy, right? And also, I think that's pretty much so far, right? So today we're basically going to talk about how to trade breakouts, right? So first, the first thing you have to know is you have to know what a breakout is, right? So what are breakouts? So I would say, in my own opinion, you can also jot some things down, right? So you can always refer to them in the future for sorry, give me a moment, please. So you can also jot some things down so you can refer to them later in the future. Right. So a breakout, what is a breakout? So a breakout, you say basically, my own words to make it simple, is a sharp or sudden movement of price of an asset, right? When we say asset, all of these stuff, so are trading Bitcoin, Ethereum, BNB, has been a finance coin, and the varieties of the coin where you have or you can get out there, they are all an asset. So breakout is a sudden or sharp movement in the price of an asset away from the established or from an established support or resistance area, right? So say we have, let me clear all of this from a clean chart. I hope the definition of the breakout is clear. So it's a sudden or sharp movement um, of price of an asset away from an established support or resistance area. Right, so I'm trying to illustrate that with a chart, on a chart rather, so you can understand. So let's take, for example, this our small range here. So say this our resistance, right? So take this line as our resistance. Resistance here, price drop down. Then I think somewhere around here, the resistance price drop down. Then also here, resistance price drop down. Before we had this sharp movement that broke this resistance we have here. So basically, this is referred to as a breakout because we broke out of this established resistance. I hope that's clear. So that's what a breakout means. A sudden or sharp movement of the price of an asset away from the established um, support or resistance area. But in this example, we broke out of the established resistance, right? Very simple. I hope that's clear. So now moving on. So we have two types of breakouts, right? Um, the first one, the first one is a bullish breakout. You can jot all of these things down. You can just take a pen and paper and jot them down, so you can always refer to them whenever you're free or in the future. And so, talking about the types of breakouts we have the first one, which is a bullish breakout. So, what will a bullish breakout be? A bullish breakout, considering the name, the way it implies, when you say something is bullish, it means price is going up, right? So, a bullish breakout will mean a sharp movement of the price of an asset to the upside or up away from established resistance, because when price is going up, it can only break resistance because what we have up is resistance and what we have below is support. So if it's a bullish breakout, it will be a sharp movement of the price of an asset away from the established resistance. So that's a bullish breakout. So in this example, this is a bullish breakout. Why? Because we had our resistance and we had the movement away from the established resistance. I hope that's clear. Right. So if you have questions, you can always ask me questions in the comment section and I'll attend to them. Right. So that's a bullish breakout. So now for a bearish breakout, it would be the opposite. Excuse me. It would be the opposite of a bullish breakout, which is a sudden or sharp movement for the price of an asset to the downside away from established support. Very simple. So let me just try and illustrate that on the chart. And look for a support area. Okay, I think we have one here already. So now take here for example. Let's say let's use this. Okay. So let's use this. Let me delete this one. Not complicate things. All right. So now, looking at this area, support, rallied up, support, rallied up, support, a small rally, support, and a big rally. Then you know this area is support area, and price came back to this area. But what happened here was that price broke out. It broke out to the downside. So this is a bearish breakout. Sharp movement to the downside away from this established support area. I hope that's clear. So now I've highlighted for the bullish scenario, so the bullish breakout and a bearish breakout. I hope that's clear. Do you guys have any questions before I go further? Let me know in the comment section if you have any questions before I proceed. All right. So let's proceed then. So how to spot breakouts, how to identify a breakout, right? So I think this part is very important. This is where you have to pay attention and also take notes. So how do you know a breakout is going to happen when you see one? The first thing you have to look out for is a build-up or consolidation Okay, let me make it simple. So for this scenario, this scenario, let's use a bullish breakout, right? So let me delete this and go back to our previous example. So I'll use the bullish example to help you identify a breakout or how to identify one before it happens, right? So now this was our bullish example we used previously. So the first thing to know before to spot a breakout is one, as I look for a build-up or consolidation towards resistance area. That is, we're talking about a bullish breakout here. So look for consolidation around the resistance area. So now something like this. So this is the daily time frame. Let me dial into 1 hour. Still using our same SR level to support and resistance level. Alright, so as I look for build up or consolidation towards or around the resistance level. So now if you look at here, if you look closely, no the fuck, my computer is lagging. But if you look closely, see this area, we had a series of consolidation before we now finally broke out. You can see how price consolidated and had a build up before finally breaking out of this resistance. So that's the first thing you have to look out for to spot breakouts, right? Look for build-ups or consolidation around the resistance area. So the second thing is look for higher lows into resistance, right? I think by now we should all know what an higher low is, right? So this is a low here, this is another low here. This low is higher than the low we had previously, right? So that's the second thing to watch out for, higher lows into resistance, right? So the third thing is a breakout with the build up or with the consolidation is always a sign of strength that buyers are willing to push price higher, right? See how price it refused to come down in this area, it refused to break down in this area. So that's basically showing you that buyers are refusing to allow the sellers push price below that level, right? It's telling you that there's no buying pressure to hold price from it breaking below the consolidation. So showing you signs of strength and that the market has enough strength to push higher, right? So that's the third thing to look out for. So another thing is the longer the range, the stronger the breakouts, right? So I'm trying to illustrate that with another chart. Once price starts to range for a long period of time, you know that then there's a breakout inbound, since it might most likely break out. And like I said, the longer the range, the bigger the breakout is going to be, right? So let me pick this one as an example. Comment, give me one please. Trying to check my trades. Okay. So now let's pick this area. Let's pick the support and resistance around this area. this resistance, then choose your support. All right, so what has basically been happening? So we are picking this area as our new, see, sorry about that. So we're picking this area. I've known it's the best to stop in my window. So we're picking the two red lines, the one above as resistance and the one below as support, right? So if you watch what happened in between this support and resistance, the price has been ranging, range, broke below, reclaimed, went to the highs at resistance, broke out of both, came back below, then went to support, then consolidated, ranged for a long while. So I think this ranged from let's see, from November to I think this is around December or January to January. So that's more like 3+ months, or 3 months basically, right? So we had the 3 range months, and all this I said the longer the range or the longer the consolidation, the stronger the breakout. So you see how we had a long series of consolidation around this area. Then what happened after? It was followed by, see, we had the breakouts here. Let me make this bigger. See, we had a breakout here, right? We had that build up, lower low into resistance. Then we had the breakouts. Then what happened? It was followed by a big move. If you see how much it moved from the consolidation, basically moved stuff from here. It's more than this anyway, but say 40%. It basically moved 40% away from that consolidation. So you see how the duration of the consolidation had an effect of the break on the breakout, right? Consolidated for 3 months, then we had a big explosion to the upside because this is a bullish breakout. So we had a big move to the upside after the breakouts. I hope that's clear. That's another thing to always watch out for. Once price starts to range for a long period of time, then you know once it breaks out, it's going to do a big move. The longer the consolidation of the range, the bigger the breakouts, right? I hope that's clear. So, um, how to trade breakouts now? How to I already explained the things to how to cite a breakout. So now, how do you trade a breakout? Mind you, there are also fake outs. The same way we have breakouts, we have fake outs. So what a fake out is, um, say price breakouts, then comes back inside, like he broke out from here, comes up like what happened here. You see, we had a breakout here, but came back inside. So this one here, it's a fake out. We call this a fake out because it didn't continue. It didn't continue the move. So it didn't continue the move to the upside. It basically faked out and came back inside. So that's what you call that a fake out, right? Just my position. All right. So you call that a fake out, right? So this one is a fake out. So how do you avoid something like this? How to identify, how to know whether it's a fake out or a breakout? So the first thing is how to avoid fake outs. The first thing is wait for the market to break out. That's the first thing you have to do. Wait for it to break out, right? Then the second thing is wait for a pullback and retest of the breakout. A pullback and hold, right? It has to hold, pullback and hold. So like we all know now by now, this is our resistance, right? I always say, like we know, if once price breaks out of resistance, it automatically becomes support, right? So when you want to trade, you wait for a pullback, right, into support area, a pullback and hold, not just a pullback, right? Because this is a pullback, but it didn't hold, right? So wait for a pullback and hold. So ideally, a simple way to identify that is once price pulls back, you can now look for any um bullish reversal candle pattern, combine it alongside the SR level, because this is basically an SR level. This is support and resistance level. But now it flipped it from resistance to support. So you combine that with a candlestick pattern, a bullish one, say the bullish reversal. So now in this case, you see we have a bullish engulfing, right? Price broke out, came to retest, then we had this bullish engulfing candle here. So it's ideal to beat this. So when you beat this, you can easily put your stops a buffer below. Like I said, always put your stops buffer below normal market level. So this was the previous low. This was the previous low. So ideally your stops should go below a little bit away from the previous low we had. That's the buffer below market structure. Right? Because this was the previous market structure. So stops should be around somewhere here. So say let me bring out the long tool. Say you bought this, then you put your stops here. You can put it here, you can put it here, or put it here, whichever it is you feel comfortable with. So you bid once you saw the retest and you saw the bullish engulfing, that's one sign that okay, most likely this area is going to hold. So remember I said a retest and hold, then that's your buying trigger, your entry trigger. But since it's a bullish scenario, it would be your buying trigger, because we are talking about price going up. So you ideal thing to do when price is going up is to bid. So if you bought this, you probably make 5R, or you make 22%, because it's ideally where to take profits, the previous high rather. So your target should be the previous high. You look to the left when you bid, the same way you look to the left when putting your stop loss. Now this was the previous low, the previous market structure low. Put your stop loss below it. For target, you look to the left. The previous high that was setting should be your first trouble area, FTA. So that's where you should look to always take profit first. So this is first target. You can take some off here. Put a line there. So you can take some off here, right? So this is a 5-hour trade. But don't worry, when we get to risk management and position sizing, you understand what I mean by 5-hour, right? So this is a 5-hour trade. Basically, I'm making 5 times the amount of risk on this trade. So you would have made, or if you bought on spots, you would make 22% of this move with this simple breakout strategy you used, right? So this is first target. The second target should be somewhere around here. And why is that? That's because in the past, if you look to the same lefts, okay, I think we have another high before that. We have another high around here, then this. So target 1, target 2, target 3, right? Very easy with that simple breakout strategy you use, right? I hope that's clear. I hope you guys understand it. So basically, this is a 10-hour trade, right? Or you call it, you say 43%, right? So you bought on spot around here with the breakout strategy. You're basically making 43% of this move, right? Or you make 10R. It's actually went further, but just I'll limit it to this area for now. So I hope you guys understand that. To buy pullback, like I said, no, but the second thing to do is to buy pullback and hold. a retest and hold of the SR level, right? So the third thing is, okay, another thing is, if the market doesn't, um, if it breaks out, right, and it doesn't give you that retest you want, right? Because sometimes when, especially when the market is very, very strong, in a bullish scenario, when the market is very, very strong, it might not pull back to your SR level, right? It might front run you. When I mean front run, I mean it might not come back to this, like this resistance level here. Price might not come back there if there's significant amount of strength in the market. It might not come back to this SR level. It might front run, it maybe pull back at the top. So how to look for entry in that kind of situation is to pull out your MA. If you guys were in the last stream, you'll remember how I talked about using MA. Let me pull out. So say you pull out 20 or 50, whichever one you use. Okay, let's use 20 MA. So this is 20 MA. I already explained how to use this in previous stream, the one we had on Telegram. So if you see, let me zoom this out. So either you use the SR level or you use a moving average. MA is an indicator, it's a moving average indicator. So you can alternatively use your moving average. So your moving average will basically serve as a support along the line, right? As long as price is above the moving average, then it's bullish. Once it starts to get below the moving average, then it becomes bearish, right? So now you see price is above the moving average. So any pullback towards the moving average, you can beat that. Any pullback towards the moving average, you can beat that, right? I hope that's clear. Oops. FL Gamers, do you still want me to zoom out on the fake outs? I think, guys, I was going too fast and I didn't pay attention to the comments. So a fake out, see, let me show you the fake out very well, right? Let me turn off my moving average. You don't have to necessarily always leave your moving average on, because it does make your charts very, very rough, right? Because you just use it, your moving average should just be like an addition. It's not something you have to depend on fully. All you need to trade is your candlesticks, support and resistance, right, and price structure. That's all you need to trade to it. So your moving average cannot come as confidence of an addition, like Jara to your trading. I don't know if you understand that. So this is a fake out basically. Let me zoom it out very well. So you see how here price broke out. Yes, the fake out is deceiving. See how price broke out. If you're not careful, you see how price broke out and came back inside. So if you were too eager, okay, let's say, that's why there's one thing you always say in trading, no FOMO. FOMO is fear of missing out. But that basically it means when, let's say, you see price going up like this, then you'll be like, oh my god, I missed out, let me buy. So let's say you went to buy this top. So you buy here, follow it and come down, all the way down, because you didn't wait, you didn't trade the breakout properly the right way. So trade it, you went to buy the top. So when you buy this top, you basically follow it down and you lose money, right? So that's why even when price is pumping, just chill, relax, and wait for it to do a pullback. A pullback is always where you should bid, right? Don't be ahead of the market. Let the market come to you, right? Don't be ahead of the market. Instead, let the market come to you. It's very simple. So now, if you are too eager and you are like, oh my god, I'm missing out, let me quickly buy. You bought this stuff, you basically follow it all the way down to this level because you went to buy a fake out, because there was no clear retest. Why this is a fake out is because there was no clear retest and hold, right? See how I don't think we really had any bullish structure form around you before we dumped, right? You see, we even had the bearish engulfing. See this big candle that totally covered out all of wisdom results. See this big candle that covered all of the price action, all of the candlesticks here. So this is a bearish engulfing. So this is a bad sign. It's basically a sign of weakness. The price is going down. So this is bad level. This is a bad thing to beat. See the difference between this and the one we had here. You see this one we had there. We had, instead of a bearish engulfing, we had a bullish engulfing. And then bullish engulfing is showing you a significant amount of strength. That is the okay, buyers have enough strength to cover all of the bearish activity around it. See how this price basically covered all of this price action here, right? So this is a very, very bullish candle and a good one to beat. So you see the difference now between a proper breakout and a fake out that we had here. I hope that's clear, right? So now, like I said, if price doesn't, you don't have to be in a hurry, right? If you're in a hurry, you end up losing money. Don't hurry to trade, right? You said unless you end up losing money. You see, if the price doesn't pull back to your SR level, just pull out your 20-day moving average, 50-day moving average, anyone you use. Then look for any retracements. You see, we had a retracement towards the MA here. This is a buying level. Another retracement, buying level. A small retracement here, buying opportunity. Then here, you can't buy here because this is, remember, this is a resistance, the trouble area. So you can't be buying. No rational trader should be buying the buying at resistance. What you should be doing on resistance, taking profit or selling or shorting, as the case may be. I hope that was clear. I hope that's clear. So now, the third thing, right? All right, thank you. So the third thing to watch out for is, okay, I think I already said that already. Safe. Market should be above your 20 moving average while testing the area. And why is that? Why should market be above 20 moving average? Now I said when market is above the 20-day moving average, this means the price action is bullish. See how this is moving average, these blue lines are moving average. See, price is basically above it, showing that okay, this is a strength. There's strength in this market. It's a bullish market. Below moving average is weakness, right? Let me illustrate that. Let me show you one price. Let me delete this. So let me show you one price is below moving average. You see this area now. You see this area below moving average. See how price is breaking down below moving average, right? Not until you broke up back above it, you start to retest. You see how you can easily use moving average to bid or to make an entry or exit, right? So if you okay, say you bought this breakout, right? Then you took profits here, took another profit here. If it starts to break and hold below, see how it's broke and hold below here, this area, then you know okay, you should get out of the trade because it's already turned to this one is a ranging. Once this one basically was ranging, right? All of the price action here. This is a ranging market. So this one, so it was ranging around this area, consolidating. So you know, most likely something might happen. Then started breaking down. Although we had a small mini move here, but it's broke back below the moving average again, right? Broke back below it, started going below its time. So you should know, okay, once from here, you should have even gotten out of the trade, right? You could have bought back around here, right? Because I don't even think it's even ideal to buy back here because you're slightly below resistance. Remember, when you want to use these things, you use them hand in hand. If your moving average, if price is above your moving average, you can't just like the way it is here. If price is above your moving average, you can't just buy into resistance. Wait for it to flip resistance, right? Maybe you can buy here, then take profits here. It's not ideal to buy here because price can get to this resistance and start turning and going down. Start doing something like this and start turning down, right? Because this resistance, people will take profits around this area. So use them together. Make sure price is in line with your resistance area, then above the moving average, then showing you a bullish structure, right? Then that's a good buying. See how I put everything together before I now get into the trade. I hope you understand that. So you don't just use only one, use them hand in hand. That way your trade will have a high probability success rate. So let me show you, I think I already showed you where a bearish structure using the moving average. Let me show you another one. Look at this area here. See how price first had this consolidation, then we now broke below the moving average, then held below it, then held below it, went back down. This is another selling opportunity. Then it's ranged for a while. This was all of the price action of last week or the upper week. You see how it was chopping around this, it was around the moving average before now breaking below it. So any pullback towards here will be your shorting. If you short, if you understand what I mean by shorting, will be your shorting trigger. Pull back towards the moving average, then if you should hold below it, then that's a shorting opportunity. Targeting the previous level. This is our previous SR level, right? So this will be targets. I hope you guys understand how it works now. So it's very simple. So I think in this video, I already explained how to use the moving average. I already explained how to properly trade the breakouts. And I hope, do you guys have any questions? I don't want to waste too much time. I think we already used 5 minutes or 30 minutes here already. Let me know in the comment section if you have any questions for the stream. So you can, on your own, you can look for other charts, right? Other pairs, maybe Ethereum, BNB, whichever pair of your choice. Look for them. Go to a daily time frame or the 4-hour time frame, and look for where price broke out in the past. And all of the things I mentioned, try to identify them in the charts. I hope you understand. So let me know in the comment section if you guys have any question behind the stream. So there will be a recording. I think I will leave the recording on YouTube, so you guys can always come back and watch it later on in the future. So let me know if you have any question in the comment section before I end the stream. You guys have any questions? FL Gamers, you said the previous live videos. I don't understand. Do you mean where to find them? Do you mean where to find the previous? If you're looking for the previous live videos, just check my YouTube. Check everywhere around YouTube. I think you should see them there. So, in the absence, do you guys have any question? I don't know. Let me know. Fine. I think I should end it by 5:50. So let me just go over the points again while waiting for your response. So I said how to avoid false breakouts. The first thing is wait for the market to break out. That's obviously the first thing you have to do. Second one, wait for it to pull back or retests, pull back and hold the SR level is broke out from before getting into the position, right? So don't just be in a hurry to bid. Wait for it to pull back and hold. I already explained that in the stream, how to know a true breakout. So wait for it to pull back and hold. Then the second thing, the third thing rather, is that the market should be above the 20 moving average. That way, you know it's bullish. So all of the things I explained today, the opposite, that's the way it works for a bearish breakout. But I don't want to go into details for the bearish breakout because of you guys. You're still at beginners levels, right? So, but if you know you can, yeah, you can trade it on M5. You can trade it on 15 minutes. You can trade it on 30 minutes, 1 hour. The important thing about all this is the context. Now you see how the context work. You have your level, your SR level, support and resistance, right? You have the breakouts. This can easily be a 5-minute chart, right? Just make sure all of this is coming to play. SR level, breakout and hold. Then you buy. Your target should be the highs, the previous high. Look to the left. This is your target. This one target here. This is another target here. Yeah, right. So we have our entry. Or let's say a plan trade. How do you know a plan trade? A plan trade is a trade that has entry, and you know your invalidation, and you know your target. Your invalidation is your stop loss. Your target is your take profit areas. So your invalidation for this trade will be a buffer below market structure. The market structure previously was this low we had. So was this low we had here. So you can either put your stops below this low or put it two buffers away or two market structures away. So we had one here, we had another one. So you can either put it here or put it here. If you put it here to give a tighter risk to reward, it is more profit, but it's kind of risky. Unlike this one is more conservative and more safer than this one. So you can just put it here. This is your validation, buffer below market structure. This is your entry. This is your targets. I already explained how to get the entry. This is your target because these highs are where most likely people take profits. So you see, if you look at this same high, this area was it had some mini consolidation, but then it pushed through, right? Sometimes it might just break down from here, right? If market is not strong enough. But in this situation, in this scenario, market was strong enough to push through this area, right? So this you're left to be your target areas, the same way you're left to be your invalidation areas, right? So you just look to the left. Those are for your targets, right? First target, second target, then the next left eyes we have on the left hand sides will be your subsequent targets. I hope that's clear. So it doesn't, but it doesn't really matter the time frame. What matters is the context to which it works. But if you're a newbie, I will not really advise trading on 5 minutes because price action in that area is too noisy. Like it's not well structured for someone that is not grounded enough, right? So our advice, you can start with 30 minutes, 1 hour, or 4 hours, right? You can use 15 minutes too. If you don't know, you follow my Twitter or my Telegram, I'm mostly using 15 minutes to trade for my entries, right? So you can use 15 minutes too, right? So you know all of the context to which it works and use them. Fine, it might not work every time, but out of 10 times, it will work 7 times, 6 times, right? So when it works 6 times, you make enough profits to cover for any loss you would have made maybe once or twice, right? Because nothing in trading is 100% guaranteed. We're using probability, we're using high probability. So if you use all of this, it has a high probability that, okay, this trade will go level with all of the points I mentioned, right? So then you know that, okay, this trade is a high probability trade, a high probability win trade or successful trade, right? So I hope no one has any question again before I end the stream. All right, so thank you guys for joining. If you're not subscribed, you can to my channel already, you can subscribe. So whenever I want to do a live session, my live session will be always educative, and you get to ask questions. Like you get to ask questions, right? And I also map out my plans on how to trade the market and levels I work with. So if you're not already subscribed, you can subscribe and give the videos a thumbs up. So that will be all for today. Catch you guys later.